Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest energy updates and digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 10 a.m. and 4 p.m. Eastern Standard Time. And here at the Crypto Republic, we give you the bird's eye view, a satellite perspective to spot the big picture shifts while everyone else is stuck in the daily chaos. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Well, ladies and gentlemen, something just shifted with XRP. Not the kind of shift that screams off the chart in one giant candle. Not the kind of move that gets everybody posting rocket emojis by lunchtime. I'm talking about a quieter shift, a deeper one, the kind that starts underneath the surface while most of the market is still staring at the wrong signal. Because right now, most people are watching, but what if the real move has nothing to do with candles? What if XRP is starting to be viewed less like a speculative trade and more like a part of a much bigger financial infrastructure story? And what if that is what is happening? Then this may be far more important than people realize. As always, I want to stop and thank everyone that takes the time to like, subscribe, share, and comment. These few things really do help out the channel very much. And with that being said, I hope you enjoy the content, and let's dissect this. Welcome back, ladies and gentlemen. If you're new here, this channel is where we break down crypto macro on the financial system without the fluff, without the fairy tales, without getting caught up like sushi, chasing every shiny object on the screen. We zoom out. We follow structure. We focus on signals, not noise. Has something already changed with XRP while most of the market hasn't noticed yet? Because this is not really about hype. It's not even about price. It's about positioning. It's about perception. It's about how assets get reclassified in the minds of institutions before the market ever prices it in. And that's where things start to get interesting. The biggest mistake retail makes is expecting structural change to look obvious in real time. It never does. Think about the internet in the early 90s. People saw slow pages, dial-up connections, clunky systems. What they didn't see was infrastructure, protocols, fiber, commerce layers being built underneath. And by the time the world realized what it was, the early positioning had already been done. Same thing with electronic trading. Floor traders thought screens would never replace them until one day they did. And it wasn't overnight. It was gradual, then sudden. That's how system level shifts happen. Slow, then obvious. And this is what most investors are missing. Macro is still running the show. Now, before we go deeper into XRP specifically, you have to understand the environment it's operating in. Because crypto does not exist in a vacuum. It sits inside inflation cycles, interest rate policy, Federal Reserve decisions, global liquidity conditions, geopolitical pressure. When inflation stays elevated, central banks stay tight. When rates stay high, liquidity stays restricted. When liquidity is restricted, risk assets struggle. Let this sink in and write this down, ladies and gentlemen. So even if something bullish is happening structurally, price may not reflect it immediately. That's where people get confused. But the real shift isn't happening on charts, ladies and gentlemen. Regulation is the inflection point. The biggest bottleneck in crypto has never been technology. It's been clarity. Institutions do not move into uncertainty. They move into defined systems. That's why discussions around Clarity Act matter. Because for the first time in a long time, we're seeing less resistance, more alignment, more urgency. Major exchanges, policymakers, institutions, they're no longer fighting the direction. They're trying to define it. That's a shift. Why this is different from last cycle, this is really important. Last cycle was chaos. Regulations versus crypto, SEC versus industry, delay after delay. Now, we're seeing movement toward agreement. Not perfect, not complete, but closer than before. And in financial systems, clarity reduces risk. And when risk drops, capital starts paying attention. Now, this part surprised many people. XRP's real position. Bitcoin equals store of value narrative, XRP equals infrastructure narrative, payments, liquidity, cross-border settlement. That's a completely different category. And here's the key. Infrastructure narratives take longer, but they go deeper because they're tied to real systems, not just sentiment. The broken system XRP targets. Look at global payments today. Slow, expensive, layered with intermediaries, capital locked in pre-funded accounts. It works, but it's inefficient. And inefficiency always gets attacked over time. That's what XRP is aiming at. But the real game is liquidity. Liquidity is everything. Liquidity isn't just trading. It's the movement of value. The easier value moves, the more efficient the system becomes. Traditional systems trap capital. Efficient systems free it. And global capital always flows towards efficiency. Even slowly, it moves. Institutions think differently. Retail says, is this going up? Institutions ask, can this be used? That's the difference. They do not need belief. They need functionality. Let that sink in. That's so important. And XRP fits that conversation differently than most assets. And this is where the shift may already be happening. The silent repricing. What if XRP is being evaluated differently before it's priced differently? That's how markets work. Perception changes first. Price follows later. Not always immediately, but eventually. Macro controls timing is very important. Even if everything is improving structurally, macro still controls the timing. Liquidity returns, markets move. Liquidity tightens, markets stall. So progress can exist without price confirming it yet. So the transition phase, we're moving from speculation to structure, from hype to utility, retail to institutional. This transition is slow, messy, unclear. It's like watching paint dry on the wall, but it's happening. But here's the real question for you. Are you watching the wrong thing? If you're watching only price, you may miss the shift entirely. If you're watching structure, you may see it early because short-term noise equals long-term structure. Price is reacting. The system is evolving. So when you zoom out, regulation is forming. Institutions are watching. Infrastructure is building. Macro is controlling pace. And XRP is sitting right in the middle of it. Not fully realized, not fully priced, but potentially being viewed differently. And that's the shift. Now, I want to hear from you. Do you think XRP is still being treated as speculation, or is it starting to be viewed as real infrastructure? Drop your thoughts below. If you got value, hit the like button, subscribe, and share this with someone still stuck watching candles. Stay sharp, stay disciplined, stay Gucci, and do not get cut up like sushi. Well, happy Monday, everybody. Hope everyone had a great weekend. A lot of developments over the weekend, even today. This shouldn't surprise anybody for long-term viewers of the channel. When you get to this part, you get to enjoy the candy in the bottom of the Italian ice. We were waiting for things like this. The most important thing right now is going to be your patience. Patience is going to be the biggest key right now when you're watching everything. That's something that we're paying attention to and I'm paying attention to. Sorry I couldn't make a video yesterday. We just couldn't get off the phones when all this broke. And it's even harder to get off the phones right now. I want to go over something very, very big. And today's video is going to be more of a rant. We're going to go over everything. So do stay tuned to this. Ask yourself this. When we were talking about the map and the east and west side of the tranches, what did I go over? What did I go over? An attack on the U.S. Treasury system, attack on the U.S. dollar. That's the big things we went over. That was my recce and my plan about everything. And that is what the basis of anyone that retains any capacity, and also a lot of the tips from the pits, are derived from that main recce because it's playing out. I mean, if you look at where things are right now, you got gold and silver stuck in the what-if forest. We'll go over that. A lot of things in the what-if forest. But in the what-if forest, that's where the greatest value is to be had. I want to welcome all the new members of our Patreon, the Crypto Republic Desk Monthly, all the new members of the membership channel. Remember, ladies and gentlemen, one tip from the pit can pay for your yearly subscription. If you want to see the macro edge and join over 500 active traders, investors, do join the Crypto Republic Desk Monthly and take your trading up to a notch and stop watching things happen and start making things happen. But I want to talk about Swiss private bank Union Bechar Pravet, UBP. They've resumed buying gold after trimming positions during the Iran-driven sell-off. They're signaling renewed confidence in bullion structural uptrade and reiterating a 6,000-year and price target. It's gold, but if you look at gold right now, it's above the 100-day moving average. So I want to say if gold stays on the chart above the 100-day moving average, it's like a champ right now. That's a good sign. But the 50-day is moving towards downwards. So again, we're in the what-if forest. So until the moving averages converge, we're in the what-if forest. So you got to come up with that. That's a big thing. If you look at silver right now, that's also below the 100-day moving average. staying below that. But if you're looking at these moving right now, you should expect that when the 50-day approaches the 100-day and crosses, that's an iron cross. They also call it a death cross. That would be a sign for people to get short. But that's something you got to pay attention to, because right now, people are less likely to follow fundamentals and more likely to follow the geopolitical narrative that's moving everything, okay? So people will probably sell into this. I don't know whoever's going to win, but CTAs are now bearish, and silver's, they're selling on weakness because that's what they see. The narrative is playing off for the overall charts. So when the charts and the narratives converge, that's a very big thing right now. But ladies and gentlemen, being a financial mercenary, we thrive in these chaotic times. We do. Because the narratives are going to push the trades that we follow in multiple markets. We have some of the biggest things coming out later in this video, so stick with me about at least what we're following. Again, we're following about the sulfuric acid play. That's massive fertilizer play. These plays are so massive, what's happening, what China just said, but I'm going to get to that. Because right now, the big things I want to focus on, right, are energy and silver and fertilizer. We have been following these plays for a long time, and I'm only going to give so much of it out right here. Everyone in the tips and pitch, they're going to see this. But this is really what's happening, ladies and gentlemen. And as a financial mercenary, these plays are going to hurt people because, unfortunately, there's not going to be enough fertilizer, not going to be enough things. But they're trading opportunities to take advantage of. And that's what's happening as we watch the world rewind into a different state of affairs. Globalism has been shown the door. Regionalism is back. So as all the old globalism trades go away, regionalism is back. That's when we had the east and the west side of the trenches, right? Trenches and no man's land. That's where all the trades were coming from. Again, they had the bricks in a unit. They put metals in place. You can monetize your silver, blah, 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 blah. They started a PMG exchange in Shanghai, blah, 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 blah. They never thought that they would just rewind and rearrange the entire world order, but they did. They did. And if you can see that the United States of America is being made the energy superpower, what else do you think is going to change right now? So now all the haters that leave messages, I love the haters. I love you, all my haters. Please keep leaving messages. I love you. I love you too. It's not my fault, right? You know, don't hate me, hate the game. The bottom line is this. The world's going to change. You're going to be ready for it. And like I always say, one good tip from the pits can easily pay for your entire year's subscription. So if you want the deeper macro research and more importantly, how to actually position around all this, do come and join us. Over 500 active traders and investors inside the Crypto Republic Desk monthly. Welcome new members. But the first real test for the U.S. blockade is coming right now. The Ellipse, widely known as a shadow fleet tanker, it's leaving. It's on the way. You got about 28 VLCCs, the largest class of crude tankers, have been booked to carry U.S. crude to Asia from May loadings. The normal figure at this point in the month is around 5. American oil has become the marginal barrel of last resort for both Asian refiners and European buyers who can no longer reliably access Qatari or Iraqi supply. This is the macro backdrop that tells you where incremental capital belongs, not just more upstream exposure. The price move has already done most of the work for the stocks that we've been following, and also in the tips and the pits. The better expression here is the infrastructure those barrels and molecules have to travel through from U.S. production basins through export terminals across the Pacific and the Atlantic. So if you look at midstream, LNG infrastructure, export logistics, it takes a whole new level of understanding to this. Why pipelines and LNG shipping and infrastructure sit at the core. In a world where U.S. export routes have become the new center of gravity for global energy flows, pipeline and LNG-linked midstream operators are not just boring yield vehicles, ladies and gentlemen. They are the plumbing of the new energy order. Write this down, ladies and gentlemen. This is massive, massive. So much alpha to be had here right now. Oh, my God. Even a view anchored in a long, cohesive campaign needs coherent downside scenarios. The most credible ones are as follows. A genuine diplomatic breakthrough. If China leans hard in Tehran and a straight partial reopening of the strait happens under international supervision, the price spike reverses quickly. High beta upstream and OFS names correct most sharply. Infrastructure is mostly insulated. Contracted volumes still move, and the structural argument for U.S. LNG does not disappear with a single ceasefire. Again, why I said Iran made the LNG future of the United States of America. Again, massive. This is where the action's happening now, ladies and gentlemen. Demand destruction at the top, and JP Morgan's own modeling shows that if prices overshoot to 150 and hold there for 2 to 3 quarters, demand destruction eventually forces price back towards the high 70s. In that scenario, price names correct hard while volume-based infrastructure names continue to earn their contracted tolls. So an aggressive SPR relief, coordinated release from the U.S. Strategic Petroleum Reserve and allied reserves could temporarily cap price, buying time for diplomacy. We're not in that camp. This does not solve the physical supply problem, but can dampen the market narrative and signal for several months we saw. So what to watch, ladies and gentlemen? This thesis will be validated or challenged by a handful of observable signals. The durability of the U.S. naval blockade is the most important domestic political pressure around gasoline prices. It's also the biggest wild card. Any signs that China is applying serious diplomatic pressure on Tehran would shift the probability that the distribution towards the quick reopening scenario. But on the commodity side, write this down. This is very important. I've been having to explain this to every family office all day. Write this down. On the commodity side, the slope of the Brent futures curve is the clearest market signal. Strong backwardation means traders believe that physical storage is real and durable. A flattening curve is an early warning that the sentiment's starting to shift. So supertanker and LNG carrier rates are the most current physical read on how tight the shipping market actually is. VLCC booking data from U.S. to Asia voyages will confirm or challenge the record export numbers before the EIA figures are even published. Modern LNG carrier day rates in the Atlantic Basin are the leading indicator. Ladies and gentlemen, this is what we're following and why it's so important, because there is so many things to trade off of this. And again, stay with me because I got to go over a lot of this. I'm going to try to cram all this in. There's so many trading opportunities to be had right now because the world just shifted. The change just happened. They just flipped the switch for the USA to become the dominant energy producer of the world. The world. The petrodollar's back. It was being replaced, but it's back. What that means, if China's got to buy oil in U.S. dollars, they can't print money. It's a big thing. On the defensive lesson governments and their militaries are taking from this episode in the freedom of navigation cannot be assumed. Every NATO member, every Gulf state, every major Asian economy with deep exposure to seaborne energy is now revising its defense budget upwards. Naval shipbuilders, missile defense, integrators, intelligence, and surveillance providers are direct beneficiaries. Their spending once committed, sticky, and multi-year. On fertilizer, this is huge, huge. Fertilizer, this is a commodity shock hiding in plain sight. The Middle East, Saudi Arabia, Qatar, Egypt, one of the world's largest nitrogen fertilizer producing regions. When Hormuz closes, that supply does not become more expensive to ship. In some cases, it becomes inaccessible. It's taken off. You got ungats if you're worrying for these people. The benchmark nitrogen prices are up 25 to 50% since the February. So huge. Non-Gulf producers are running at high utilization with pricing power they have not had in years. Integrated agriculture input companies benefit from the fertilizer moving while carrying optional on-seed chemical pricing. Ladies and gentlemen, that's massive what I just went over. Again, so when I say the switch just got flipped with energy, it just did. Longtime members of the Wolfpack know we used to talk about the sides of the tranche and the attack on the U.S. Treasury system, the attack on the dollar. You can see that. No one could have saw this coming. But again, ladies and gentlemen, something just broke in the global system, and the market is pretending it didn't. Oil just spiked over 100. Shipping routes are quietly collapsing, and the last physical barrels from the Middle East are about to run out. So here's the part nobody's talking about. This isn't a supply shock. This isn't a timing shock. And if you understand that distinction, you're about to see what happens next before the market does. Let me show you how serious this is. Stay with me. Right now, tankers are turning around the Strait of Hormuz, insurance markets are freezing flows, and roughly 12 million barrels per day of supply is effectively offline. But here's where it gets critical. The last shipments that made it through the system, they're still in transit, which means we're seeing right now in price isn't the shortage. It's the anticipation of the shortage. And those are two very different things and phases. Write that down, okay? Because when those barrels arrive around April 20th, that's it. The system goes from we think supply is tight to we have no supply buffer left. And historically, that's when markets don't move gradually. They gap violently. Let's quantify this. Stay with me. We'll take the PhD out of PhD. In just the last few weeks, global systems have drawn down 250 million barrels. That's about 6.6 million barrels per day. Asia has absorbed the majority of the shock. Meanwhile, spot Brent is pushing 140 plus. Futures are lagging behind. The divergence tells you something extremely important. The paper market is still behind reality. And when that gap closes, that's when volatility explodes. Now, here's where most people get it completely wrong. Stay with me. Rewind this if you have to. Write the transcript down. They think oil up equals market crash. That's too simplistic because what actually matters is how long does this disruption last. Right now, the market's pricing in something very specific, a short-term shock followed by a forced normalization. And the reason is simple. The system cannot function like this for long. You've got governments drawing inventories to operational minimums, shipping companies losing 50 to 60 million per week, entire supply chains freezing. This isn't just sustainable, which means one thing: resolution becomes inevitable, not optional. And when the resolution becomes, that move won't be gradual. It'll be violent in the opposite direction because positioning right now is still not extreme. Let me repeat that. We're not at a euphoric positioning. We are at early stage risking. Here's what flows are telling us. 2 weeks ago, net bearish. Last week, neutral. Now, flipping positive. Hedge funds, increasing exposure, covering shorts, re-entering cyclicals. But overall positioning, still around the 30th percentile historically. That means this rally, if it starts, has room to run. Now, let's talk about the one thing holding this entire system together, the consumer. Because this is where the narrative breaks from every previous crisis right now. Consumer cash is 22.7 trillion, net worth up over 66 trillion since 2019. Retail spending still compounding nearly 7% annually. This is not a weak system, ladies and gentlemen. This is a system with shock absorbers. Write that down. Which is why the market isn't collapsing, it's recalibrating. But there is a pressure point, and this is where things get dangerous. Inflation's coming back, CPI projected to spike towards 5 to 6% annualized. Manufacturing prices paid leads to highest since 2022. That's so massively nuts. Service inflation is the largest jump in 13 years. And what's driving this, you might ask? It's not demand, supply constraints. Again, supply constraints. Crisis-driven supply constraints. That's a completely different type of inflation. And central banks hate it because they can't control it. So now you have a market caught between two factors: short-term shock, oil supply, chains, geopolitics; mid-term strength, consumer, earnings, liquidity. And when those collide, look out. You don't get a trend. You get volatility expansion. So what actually works in this environment, you're asking? This is where it gets interesting because the winners are not random. They're extremely specific. The market's already telling you. Scarcity assets are outperforming. Supply-constrained commodities are bid. Select tech is holding up despite pressure. The logic is simple. You want exposure to bottlenecks, not broad beta, not generic exposure, bottlenecks. I can't believe we're giving this away for free. If you're still here writing this down, I salute you. And this is where most people fall behind because identifying the macro trend is one thing, but knowing where positioning is building, where flows are accelerating, where supply is actually constrained, that's a completely different level of analysis. That's not headlines. That's not Twitter. That's deep data. So here's the bottom line. We're in a window where downside is driven by headlines. The upside is driven by structure. And when this resolves, and it will, the move higher won't give you time to think. It will already be happening. The only question is, will you understand it before everyone else does? And this is exactly what I'm always talking about, ladies and gentlemen. One good tip from the pits can easily pay for your entire year subscription. If you want the deeper macro research, and more importantly, how to actually position around all this, come and join over 500 active traders and investors inside the Crypto Republic Desk Monthly. Welcome all new members. Ladies and gentlemen, what a time to be alive. What a time to be alive. Again, cash, not bonds, ladies and gentlemen. Write that down, cash, not bonds. 82 billion in foreign central banks selling at a 1.5 trillion basis trade at 20 times leverage, a Fed that can't cut and can't intervene. Hormuz crisis broke the most reliable trade in macro. The Hormuz crisis broke the most reliable trade in macro and has given birth to other reliable trades that we're going over every day. The whole world is taking advantage and gorging on them. As the remora, we are gorging on this. As financial mercenaries, we take advantage of this every day while we're in carnivorous mode. Carnivorous mode. Two assets are supposed to move together when the world falls apart. The dollar and treasuries, flight to quality, the most reliable trade in macro. It broke. Since February 28th, the day U.S. and Israeli forces struck Iran and the Strait of Hormuz effectively closed, the dollar rallied to 100.64 standard crisis behavior, capital fleeing to reserve currency. Meanwhile, the 10-year treasury yield rose from 3.96 to 4.44. That's not standard. That's the opposite of standard. Capital went to dollar cash, not dollar bonds, not dollars equity, cash. The bond market will hold your currency and no longer trust your duration. In 5 weeks, foreign central banks sold $82 billion in treasuries. Custody holdings at the New York Fed dropped to $2.712 trillion, the lowest since 2012. My God. The 3-year auction held up fine, 2.68 time bid to cover above average. The 30-year earned a D+. Investors will lend you America's money for 3 years. 30? Increasingly not. The basis trade leveraged hedge fund arbitrage that now shows $1.5 trillion in treasury exposure, roughly double its pre-COVID size. It bent but didn't break. Oh, my God. If you look at Citadel's Global Fixed Income Fund, they drew down 8.2% in March. That's massive. The MOVE Index spiked 28% in a single session. Repo held. No mass liquidation. The system survived because the selling was orderly, not panicked. But here is what the system survived with. Dealer balance. Sheets a quarter of their 2007 relative size. A Fed that cannot intervene without fueling inflation because the sell-off and a buyer base with China's holdings are down 47% from peak. Quietly replaced by Cayman domiciled leverage running 10 to 20x. The dollar's fine, the debt is not. Ladies and gentlemen, this is unfortunately how a country can go bankrupt. It's not good. It's a basis trade time bomb. So if you look at this, Hormuz didn't detonate the bomb as far as we're concerned. It armed the detonator and the building inspectors locked outside. This is a financial time bomb ticking. We go over this all the time. What follows is the financial transmission mechanism connecting 100 plus oil to the structural integrity of the treasury market itself. The data, the bulls and bears are both misreading. The Fed's impossible bind, the Japan wildcard nobody can size, and 3 trades we're positioning around with kill switches for when we're wrong. And the people who take the time to actually understand what's happening underneath are the same ones positioned before the next move begins. Because by that time, it's obvious it's already too late. If you want to stay ahead of how this evolves, is exactly what we're tracking inside the Crypto Republic test monthly. Real-time shifts, positioning, how to navigate as it unfolds. The goal isn't to react, it's to be positioned before the move. One good tip from the pits can easily pay for your entire year subscription. If you want the deeper macro research to learn how to take advantage of this, come and join over 500 active traders and investors in the Patreon, the Crypto Republic test monthly. Ladies and gentlemen, I say all this because this is what we're playing, and it works. I guess that Main Street doesn't want retail to know these things, so the greatest pleasure I had is telling people and sharing, even Domenico sharing this, because as a financial mercenary, we're not going to get cut up like sushi. We are gorging as the remora, eating all the sushi under the apex predator. You can see what's happening here. Again, but I want to say one last thing, then I'm going to get really into XRP, ICP, and HBAR, because right now we're getting calls nonstop about certain things, because this is so important. China to ban sulfuric acid. We've given out a lot of tips in the pits from this about a month ago. China to ban sulfuric acid, copper and uranium mining impacted, bullish and bearish catalysts. Who loses? Ladies and gentlemen, China has just indicated that it will halt exports of sulfuric acid starting in May 2026. While this might sound like an obscure industrial headline, it's actually a massive supply chain shock that's about to ripple through the global commodities market. Sulfuric acid is the critical region required for hydrometallic mining process, specifically the leaching of copper, uranium ores. Without it, you cannot extract the metal. Again, so copper and uranium are in play. China is one of the world's largest exporters of byproduct sulfuric acid, and removing that supply from the global market guarantees a severe cost spike for miners and the metals itself who rely on imported regions. This export halt is hitting a market that's already incredibly tight. Global sulfur prices have surged 70% recent disruption in the Strait of Hormuz. We killed it. We straight murdered it with this. This is one of our biggest home runs. And now the primary chemical derivative is being restricted by the world's dominant supplier. The impact will be immediate and highly localized. Operations in Chile, the Democratic Republic of Congo, Zambia, Namibia that rely on heavily imported Chinese acid for their heap leaching and solvent extraction processes are about to see their operating expenses explode. Heap leaching is crazy. This will inevitably lead to production curtailments, delayed expansion, the tightening of global copper and uranium supplies. However, in every supply chain crisis, there are strategic winners, ladies and gentlemen. While mid-tier products in vulnerable jurisdictions are about to see their margins crushed by soaring reagent costs, there are certain global mining plays that are going to benefit from this in an amazing way. amazing way because they're in stable Western jurisdictions, have zero reliance on Chinese sulfuric acid imports. They produce their own captive byproduct, like us. We're sold out from all the refineries that we run over in Indonesia. Everything has been bought. It's amazing. I've never seen people just suck this up so fast. It's crazy because you need this for copper and uranium heap leaching. You need it. And the rest of the industry scrambles to secure expensive alternative supplies. This major is about to see its competitive advantage and its free cash flow expand dramatically. It's unbelievable. So understand this. In May 2026, China is cutting off global access to its byproduct sulfuric acid, removing critical reagent from the market. The copper squeeze. Heap leaching requires 3 to 3.5 tons of acid per ton of copper cathode. This is crazy. Chile alone imports 1 million tons of Chinese acid annually to support 20% of its national output. The uranium impact? Conventional acid leaching is the standard for uranium extraction. Operations in Namibia, Kazakhstan will face immediate margin pressure. The losers, ladies and gentlemen, 2 mid-tier producers and 1 copper miner in South America. The other uranium producers in Africa are directly in the crosshairs of this region shocked, with immediate OPEC inflation threatening their margin stock pricing. Ladies and gentlemen, they're going to be strategic winners of this, and it's unbelievable because the exposure to the input shock for what's going to happen with copper and uranium prices, their prices are going to straight murder it, and these companies are murdered. If you want to stay ahead of this and how this evolves, this is exactly what we're tracking inside the Crypto Republic Desk Monthly. Real-time shifts, positioning how to navigate as it unfolds. The goal isn't to react, ladies and gentlemen. It's to be positioned before the move. One good tip from the pits can easily pay for your entire year subscription. If you want the deeper macro research and learn how to take advantage of all this, come and join over 500 active and traders and vets in the Patreon, the Crypto Republic Desk Monthly. Ladies and gentlemen, I want you to understand something right now, and this is very important. None of this is financial advice, just my own opinion. Anyone who attains any capacity. When we were going on and on about the different sides of the tranche, financial World War III had broken out. We were positioning. Remember, everyone who's new here, I salute you. Long-term readers of our Patreon and long-term viewers here knew that we were positioned before the first carrier strike group got to the ME with all this going on. We had taken positions in everything I'm talking about right now. So we straight murdered it with this. Because again, all my haters hate on me. I love it. I really don't care. I feel for you. I love you anyway. The problem is it's about positioning. It's positioning. It's knowing these strange facts that allows you to position everything I just went over. If I spoke too fast, rewind it. I'm sorry that the videos go too long. I'm trying to get as much in as I can at the time I can. I can't get off the phones because all the things of us being correct for the family offices and the people that retain us any capacity, they want to talk because they're so excited about being right, being ahead of what's happening, understanding. Again, everybody knew they were going to close the strait. It was common sense behind Wall Street and other places. Everybody knew it was coming. This isn't a shock. It isn't a shock. It's part of a broader trend to realign the world. The petrodollar survives so we can print money. If you can't buy oil in renminbi, they can't print money. They got bigger problems. They got to come now in China, and they got to buy oil price in U.S. dollars. No more discount, no more nothing. We'll probably see Iran, they're probably starting to do some military attacks right now on Bahrain places. They'll probably try to hit the Red Sea pipeline and other things around that we were talking about, right? But again, America's globally open for business. All those tankers going to the Gulf of America, that's it now. It's there. So as you watch things unfold in real time, ask yourself this: are you where you want to be, taking advantage of what's happening right now? Because if you're not, do come and join us. Because what a time to take advantage of all this. So if they just flip the switch with Energy America, and I'm calling it Operation Energy America, baby. Operation Energy America is going to lead to Operation Printed to Wind It. So Operation Energy America, live, ain't going back. Chaos. We got to look at VLCC tanker rates, how the actual miles it takes. I'm not going to start talking about nautical facts right here, but the shipping time it takes to go from point A to point B. But these are on the thing. But what we just went over, uranium, copper, heap leaching, all the refineries that we run and own, all our sulfuric acid sold. Anything that we can get out, they need it. Remember, we talked about leaching for nickel. Nickel was doing good for this. Copper in processing plants. Now you got your rainbow. Forget about it. Ladies and gentlemen, have a blessed evening. But why I always told you, again, this is my own personal opinion, not financial advice. And when people see and you can lead them to where they need to go and you're ahead of the narrative and you're seeing this because you've done your rec, you've done your research, you've done your plan, you've done everything as a financial mercenary so you can live and thrive in financial combat and battle every day. Every day. You train for these things. You see what's going to happen and why. Ladies and gentlemen, the world is changing. Take advantage of DCAing and prices. Be frosty. Be safe with your position size. Don't FOMO it. Take your time. Do your research. This content's for informational and entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor when making any investment decisions always. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You got two choices. You can be like the crowd reacting after the move, rationalizing why they missed it, telling themselves it'll never happen again, or you can be the one who saw behind the curtain, the one who understood didn't trust the shift, the one who positioned early, not randomly, but intentionally, because some moments in history are loud, but the ones that change everything are quiet. Right into the moment they're not. And this is one of those moments. Do not blink because the world is distracting you with noise. While XRP continues development behind the scenes of building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. Just open your eyes, smash that like button, ring that bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, research you can use. Don't just watch this happening. Stay informed, stay ahead, stay in the Republic. I love you all. I'll see you on the front lines.